This is a preview video. Thanks for joining us at xm.com. The September European Central Bank meeting is just 2 weeks away. However, the decision for another rate hike is currently a coin toss in money markets. Could this week's Eurozone inflation numbers offer any clarity on the matter? I'm Cristina Marujos. With me today is our senior investment analyst, Haralambos Pissouros. Haralambos, flash CPI numbers for August are to be released on Thursday. What are we likely to see in the data, and how could the data potentially change the market's expectation for another rate hike by the ECB in September?
Hello, Christina. Yes, indeed, investors are evenly split on whether a September hike could materialize, but how we got here? Let's go back at the July gathering. Then the ECB raised rates by 25 basis points to a historic high, as it was widely expected, but policymakers refrained from committing to further moves, with President Lagarde at the press conference acknowledging that the economic outlook has deteriorated. And she also replied with a decisive maybe when she was asked whether they are planning to hike again in September. Now, since then, the inflation data for July revealed that headline inflation dropped to 5.3% year on year, from 5.5%, but the core metric that excludes energy, food, alcohol, and tobacco held steady at 5.5%, which is far from suggesting that the ECB's job is done. However, growth-related data out of the Eurozone has been coming on the soft side lately. Just last week, preliminary business surveys for August have rung the recession bells, with the service sector PMI falling into contractionary territory, joining the manufacturing index and dragging the composite index down to 47 from 48.6. So this sharpened the ECB's dilemma. Should they pause to safeguard the overall economy, or should they stay committed to bringing inflation down to 2% at any cost? So with that on investors' mind, Thursday's flash inflation numbers could attract special attention, as they could tilt the scale either towards a September hike or a September pause. The headline CPI rate is expected to have declined further to 5.1% from 5.3%, and the ultra core rate that excludes energy, food, alcohol, and tobacco is forecast to have slipped to 5.3% year on year from 5.5%. So, further slowdown in inflation amid a bleeding economy could convince market participants that Lagarde and her colleagues could pause in September and wait for a while before deciding whether further hikes are appropriate.
I see. Now let's turn to the market reaction. We've seen the euro struggling lately, especially against its US counterpart. How can we see the single currency perform this week on the CPI data?
Now, if indeed inflation slows further, the euro could come under more selling pressure. And as you correctly pointed out, especially against the US dollar, which has been enjoying inflows, not only because traders are re-examining the case of interest rates in the US staying higher for longer than previously thought, but also as a safe haven due to concerns surrounding the performance of the Chinese economy. Having said all that, though, besides painting an ugly economic picture, the PMIs revealed that inflationary pressures have slightly picked up in August. And this means that there may be some upside risks surrounding Thursday's CPI figures. So, in the case that inflation reaccelerates somewhat instead of slowing further, the euro may rebound on renewed speculation about the September ECB hike. However, for euro and dollar to re-enter an uptrend orbit, a lot more is needed. Besides stickier inflation, Eurozone growth data may have to start showing signs of stabilization and improvement.
Haralambos, thanks so much. This was a preview video. Thanks for watching at xm.com.